Welcome to Trading Lounge and the Australian report for the 29th of June, and starting with a monthly chart here, I want to have a look at a bullish count and a bearish count and how we can trade those. So with the bullish count, this is how it looks here, and this would be pretty much in line with the Nasdaq, which is the king of markets really at the moment, because they're in the new industry of technology and leading all the other markets to the upside, and in fact lifting the other indices up to the upside as well. So in this instance here, we've got wave 3 here, an A wave here, a B wave up here, and a C wave here. And I know that it's possible to count 5 waves up here in terms of 1 and 2 and 3 and 4 here, and then up for 5 here. It's just that wave B here overlaps the top of wave 1. This wave 4 here overlaps the top of wave 1 here. At this degree of structure, we shouldn't expect that to occur, and that's why I haven't counted it as 5 waves, and we've called this in here as wave C low. So we don't have enough evidence yet to say that we have an impulse wave up here, because right at the top here or close to it, is the 61.8% mark from the top to the bottom here. So that means that the move down through here, being 5 waves, could have this move here as in 3 waves here. So we don't have the full 5 waves here yet, and that's what we're looking for a move to the upside here as wave 1 here, like this, and then wave 2 coming back here. So we don't have that. We've only have 3 waves up here. So only having 3 waves up here is corrective, and that means that pulling up to the 61.8% mark here means that the market can come down and make new lows here. So in that case, it can look like this here, where we have wave 3 here, wave 4 here, before we had wave 4 sitting over here. Now, in this case here, we'd use this as 1 and 2 and 3 and 4 and 5 here. But as I mentioned, there is an overlapping wave structure between the top of wave 1 here and wave 4 here. I mean, do we accept that at this degree of structure in terms of Elliott? It's probably, I mean, it's just not really the done thing, but that's where the problem lies. That's all I can really say at that point. So in that case, we could look this down as wave 1 or wave A, and wave B here, or wave 2 or wave 3 here. I know we're experiencing debt within the within the world economy, bigger than World War II, so much bigger. So there's possibilities. There's good stories to get some deleveraging back into the global system. Anyway, apart from that, let's just go into the daily chart here. And what we have been doing here is just counting this up here. Now we've counted it up in terms of a positive structure here that I've got here in terms of 1 and 2 here, and then 1 and 2 in here, and a nice 5 waves here. No problem with that. Looking for wave 4 here, and then up for wave 5. If this market comes down and overlaps the top of wave 1 here, this wave 4 overlaps wave 1 here, well then we've got a problem at that point. And we have been looking at this as a bearish case, so in the bearish case here. So we just basically want to be looking at 2 sides here. We want to be looking at all sides. We want to understand what's going on. We don't want to stick our head in the sand. And then we also need to work out a trading plan that can take us to either of these destinations. So in this case here, from the low up, we've got, let's just bring this in a bit further. So from the low up here, we can look at this as an A wave, and then a triangle for wave B, and then 1 and 2 and 3 and 4 and 5. So it fits really nicely, and it comes into the 61.8%. And we can count this down here as an impulse. So we've got it as an A wave so far, and a B wave and a C wave coming down here. But it could certainly be this pattern here as well. So I don't want to stick my head in the sand and just ignore this here. So in either way, in both cases today, we'll see this little move come down here. Once we make a new low below here, then this low here, then it confirms that we're going to be coming down further. because I can arrange this here a little bit differently here. If I can just take a minute here, I'll just remove this here. It's possible to have this down here as wave C here, for example, and this wave B here, and like this. So an A wave, a B wave, and a C wave right to here, and we can count that up as one here. And then the market can move with that. If it doesn't take that low out, it could just move straight up from that point. But if it takes that low out here, then we're in a bearish mode. So that is key at this particular point in time for this. So just be mindful of that. As long as we know that, then that's helpful at that point. So at this stage, we're calling it wave 1, and the US markets were down quite firmly at nearly 2.5%. So we can expect some follow through on the bearish side for this. So we're at 5,800. We know 800 is the medium level. We know it's also part of group 2. So 65, 72 and 80 here is all part of group 2. And you can see that they've all played out a nice part here as well for this. So you could even justify a little trend line through this space here for these here as well, one here and also one here as well. Not that it makes a big difference, and trend lines are handy, but they get broken. So but we do have 5 waves down here. We're looking for a retracement back into the 61.8%, and we could even say, if I copy this here, we could also go long from that point too, if that top there was breached. Okay, that would make us bullish from that point, because at the moment we'd look at this as wave 1 down here, and then back for wave 2, and then down for wave 3 here coming into play. So yeah, so anyway, this 5 waves coming down here will be important, and this is where we want to short. We want to short it because of this structure of 1 and 2 here, and going down to 3, but we also want to short it because of the other pattern that we've got here at the moment, which if I can just come back into, and I've got this pattern 1 degree smaller here as well. So just bear with me a little bit. So this is the case that I just talked about just then. It's possible to have wave 4 here. I don't think that's the case, so we can remove that now. It's possible to have this is the A, the B, and the C here, but that low needs to stay in place here, and then we can go long from that point. But otherwise, we are looking at a move that will take us down here for 1, back for 2 here a little bit, probably quite small, and then down for 3, 4, and 5, coming down into this space here. So let's go in and have a look at that. This is the one that we're looking at here. So with wave 3 up here, an A wave here, a B wave here, and then 5 waves down for the C wave here. So let me just open this up and get it into perspective here. So I'll squash it all up here to start with. So from wave B here, blue wave B here, we're looking for 5 waves down, and 1, 2, 3, 4, 5 for wave C of 4 here. That's what we're looking for. So we've got 2 counts, but they're both in the same direction. So that makes life easier, because sometimes we don't have those counts in the same direction. And we know that if this wave 2 up here, if that's breached for whatever reasons, if that market moves up through that, then we know that we have to be bullish at that point. But otherwise we stay bearish. Now, just to refine this a little bit here, this move down through here will be in 5 waves. Now, you can, with every an impulse wave is 5 waves. With every impulse wave, there's beginning, a middle, and an end. And sometimes we can't work out the whole structure, but sometimes things just pop out. So we can see, for instance, here that the market moved really strong here. So this would be the 3rd wave here, and halfway between that here somewhere, that would be the halfway mark of the whole trend. So we could really grab the top of that trend and flip it on its head and bring it back down to this point. So As I mentioned, the US markets were down strong. This market's already built in because of the futures, the price is built in because of the futures market, but the cash will open and this will drop lower here. We're at the 5.8 here. So I can see we've got wave 1 and 2 and 3 here. I think there's a little 4 and 5 to go with all of this. So this is the 50-60% retracement level in here. Will the market move back to this point? I'm not quite sure. So we need to do a couple of things here. We want to get short because the probabilities of the Australian market going down after the US market was down 2.5% is pretty strong. So any resistance, right, on this level here, we want to be shorting here. So that means that the market would come down, and that first below the level here, that's the one that we want to set up here, because any breach of that would take us down further from that point. Now you can also look to add further down through all of this as well here, especially in this structure here. You should be able to get, I mean, everybody's got their own style. I mean, for me, I just like feeding contracts in, you know, and then moving the stops up and keep feeding them in. So I'm really concerned about my exposure all the time. So I'm not the one for dumping a load of money on one turn or anything like that. I just like to feed it in like fishing, you know, and yeah, just manage that exposure all the time. Keep moving your stop to get to, you know, to get to break even, and then look for another trade set up on a smaller degree to add to that, and you know, just keep building it. On the 15-minute chart, we can move in here and have a closer look at this. So that first move down here from wave 2 here, I'm looking at as wave 1 and 2 here, and you know, we've got this from here, we've got 1 and 2 in here, we've got a third wave in here and a fourth and fifth. So we're pretty close to the low here in this instance, and we may not pull all the way back into this space here either. So the main point is here is that just visually looking, you see how that had its first low below the level? That's where that's what you'd be looking for. And then you put that under there, okay? And that's what we'd be looking for under here. Sometimes it's difficult, and sometimes it's easy. But if you know the market's going to be moving lower, but you're not sure where to get in, then just use less money. You know, if you normally trade, you know, 10 contracts, then just put in 2, you know, because 2 contracts, you know, it builds up over time, you know. Was that save the pennies and the pounds take care of themselves, that old saying? It's the same in trading as well, just by putting in very small positions and then just you know, getting those positions to break even and putting the stops with those and keep building in onto the downside. So first up, this 5,800, this is the big daddy here. This is the number 8 here that you need as the resistance. Now, if we get fortunate, if you see a little sort of wiggle in here for this because it's already priced in, and then we see some sort of rally here, it may not come back all the way up to here, it may just come back to here. Well, then you might be able to think of, you know, getting that there. So if the market comes down to here and then bounces back up and get something like this here, then you might be able to sort of, if that low's in a good place, then you could put it through there, because sometimes the low will be, you know, come back right back here, and then it sort of becomes a little bit useless because it's way over here, you know. So you've got to try and find something, find a way in through all of this, and understand the levels too, because you know, when we're looking at this here, say 5.8 here, that's where 5.850, the midpoint, that's where it may just come back to there and fold from that point. And then you take it step by step, because there's group 1 here, so there's 10, 20 and 30. So if support is found on 30, then you'll know you get up to 50. If it gets up to 50 and then comes back and finds the 30 as the resistance, well, then you can move in from that point. On the tick chart, just to have a look at this particular trend down through here a little bit more, I was counting it like this here. So wave 1 to here, 2 to here, 1, 2, 3, 4, 5 to here. this can, I haven't put these in the right place yet, but that's there, that's there. 1, 2, 3, 4, 5 for the third wave here. Probably the A, the B, and the C for the fourth wave here. I'm not sure about this. I just haven't spent enough time on this here. I don't know if this is 1 and 2 and 3 and 4 and 5 down here. I'm not sure how this is going to play out here. So that's why I mentioned that, you know, once you see the 5-8 as the resistance, then that's where you need to go in, and always put your stop 61.8% above. So if you went in right now, well, then the stop would need to go above here. If it got in down here, then you'd need to be up here with it. And the same, if you got in earlier up here somewhere, then the 61.8% is up here somewhere. So just leave it always above that. Always find out where that is. Find the closest largest number over here. Move to that. Also find the previous high. Try to get a count on that. So none of these wave 2s here should be ever breached again if we've got the right count here. So that's that, and I'll leave it at that. And yeah, so alrighty, I'll leave it. Okay, cheers. Thanks.